Good evening everyone, good evening traders, and welcome to Admiral Markets webinar. Today is 6th of May 2015. My name is Nenad, and today we will talk about CCI indicators. So we will talk about CCI, Commodity Channel Index presentation, and how to use it. Actually, this is quite a good indicator, and traders usually use it in many different setups. So I will present you the indicator, and then I will give you tips for possible two good strategies, simple, where you can use with CCI, Commodity Channel Index indicator. So before we begin, as always, our standard is disclaimer. Online educational materials are available by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration the information this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. That is the first part. The risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets Security takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me, and in no way to represent the actual suggestion for a trade. These are not Michael's opinions at the website. In the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. Okay? Now, today, as I said, we will go through quick walk through indicators. Okay? Then we will go to classification of indicators. Then we will talk about CCI, and then at the end we will see two simple strategies which are used with CCI indicator itself. Okay, Forex indicators basically represent usually the mirror of price action, but in some other dimension. We need to distinguish between the indicators and price action itself. There are a lot of classifications for indicators, and we will go through some of most used today. Of course, we will go through various indicators each month, and today this is the month for CCI. Now, the indicator is usually something that tells them something. Okay, I call it a mirror of price action, but it uses a mathematical calculation which is based on a price. Okay, Forex indicators use different statistics to measure current conditions and to forecast financial or economic trends. The main purpose of using indicators is to define a trend, to confirm a trend and entry, and to give us stop loss and target price placement. Okay? So it's not the main purpose of using indicators is not to give us signals. It doesn't go like that. We need to use various filters to determine whether we will buy or sell a currency pair. So the main purpose is to define a trend, to confirm a trend, and give us the entry, and to place stop loss and target price. Now, those are different meanings for indicators, different uses. Now, each sort of indicators use different parameters. For example, we have leading indicators and lagging indicators. Now, leading indicators are indicators which are a true mirror of price action. And usually leading indicators are giving us either an immediate trend or entry. Okay, so leading indicators are giving us immediate trend or entries. Okay, now CCI is a leading indicator. Okay, it is a leading indicator. RSI is also a leading indicator. Stochastics is leading, and that is the entry indicator. Lagging indicator is we call it momentum indicators. Those indicators usually are lagging behind the current price. Okay? But why is that so? It is because lagging indicators are used for capturing the trend and to give us an overall momentum in the market. MACD, it can be entry indicator, but it's usually MACD serves as momentum because it's lagging indicator and it gives us the prevailing momentum and trend. RSI, some people and some traders deem that RSI is a lagging indicator. In my opinion, it's more leading than it's lagging. So it's leading indicator. But it has some uses also in capturing the momentum. So there are also momentum, rate of change, and on balance volume or OBV. My favorite leading indicator is RSI. Stochastics is also good. CCI, I cannot now think that maybe say that CCI is better than RSI or stochastic. Maybe I use, and I have been using stochastics for some scalping strategies more often than CCI, but CCI also has advantages, RSI also, so I have picked CCI, RSI, stochastics to be top leading indicators. Of course, my favorite momentum lagging indicators is MACD, but also we have awesome momentum rate of change and on balance volume. But they serve different purposes, because on the chart we should have a leading, a lagging indicator, and an entry indicator. Usually it goes like that. Then there are so-called moving averages. Moving averages are dynamic support and resistance levels. Moving averages are very, very good because they give us the prevailing, and they show us usually the prevailing trend. I personally don't think that we should use EMAs or other moving averages just for confirmation of the entry, because in my trading career so far I have witnessed that if we use EMA crosses for entries when market is ranging, we can have a lot of false signals. So DNA spiral, it's called DNA spiral, it can be pretty nasty. So that is why I use EMAs just for giving me the trend. Most used moving averages is definitely, most used moving average is definitely exponential or EMA, but we also have simple or SMA and smoothed MA. There is another version of moving average called linear regressed moving average or LMA. Bollinger Bands also serve as dynamic support resistance level, and we have static support resistance levels such as Camarilla or pivot points. So all of those classify for indicators, okay? All of those different categories are basically lagging, leading, dynamic, and static indicators. Now let's talk about CCI indicator. It was invented by Mr. Donald Lambert in the year of 1980. CCI indicator is effectively an oscillator, okay? So CCI indicators show us usually both overbought and oversold levels. We use CCI indicator for momentum breakout, for trend trades, or for overbought and oversold levels where we can spot divergence, but we also can use CCI for giving us great opportunities as a leading indicator. As a leading indicator, it usually captures momentum breakouts which we use for entries, and those are called momentum breakouts, and it uses overbought and oversold conditions which we use usually for counter-trend opportunities, or also for deep retracement trend entries. Okay. Now this is the usual setup of CCI indicator, and usual time period for CCI indicator is 14. You can see it in the top left corner where you open the indicator. It's pretty much straightforward because each MT4 platform uses and has CCI indicator by default. So in the top left corner you can see the period of CCI is usually 14, and you can see different levels. Usually CCI above 100 indicates overbought levels. CCI below minus 100 indicates oversold levels, and CCI 00 cross indicates momentum surge. So this is how by default CCI indicators look like. Now if you open the indicator, you can also put a line here at 00 level, and that is what you should be doing if you want to trade momentum surges with CCI. Okay, so this is the default setup. You can also put plus 200 and minus 200 levels, because those levels are often seen as a potential deeper retracement within a trend. So my suggestion is to add plus 200, minus 200, and 00 line. Okay, so you can benefit from deep retracements and from momentum surges. Okay, so CCI plus 200 or minus 200 indicate extremes. Usually traders do not put anything above plus 200 or minus 200, because if the price goes above 200 or minus 200, that is deemed as a deeper retracement. And you don't need to use Fibonacci tools for that, because CCI above plus 200 or minus 200 is indeed deep retracement, such as 88.6 or 78.6 on Fibonacci. Usually in the uptrend, if CCI drops below minus 200, traders will opt for long positions. Okay? In downtrend, if CCI goes above 200, traders will go for shorts. That is pretty much logical, because if you have plus 200 and you have minus 200, and now let's say that we have a downtrend, a big downtrend. This is used mostly on higher time frames. So if we have a downtrend and CCI downtrend on the price, and CCI suddenly goes above 200 and price is in downtrend, usually there will be some reaction from that level. So you can always put minus 200, plus 200, and use other price action tools to determine whether that is a level to go long or short. So that is a little trick for CCI, because when you open CCI, you will not be seeing any plus 200 or minus 200, but if you put it on your charts, you will be seeing plus 200, minus 200 levels. Okay, and add the line to 00 indicator, because you will benefit from momentum surges. Okay, so this is one of the tricks you can use with CCI indicator. Another useful tool for CCI is also that CCI can be used for divergence trading at minus 100 and plus 100. If we use it for divergence at minus 100 or plus 100, we should respect the following rules. Okay, if the price is rising while CCI moves down to negative or minus 100, it is the indication of a bearish divergence. If the price is dropping while CCI moves up to positive or plus 100, it is the indication of a bullish divergence. So let's say, for example, that you have CCI. So this is plus 100 and this is minus 100. And this is the price. So if the price is rising, okay, and CCI drops to minus 100 levels, that will be a sign for you to go short. Now these are the ideas how you can use CCI, and CCI divergence can be used on each, of course, time frame, but it has the best use, of course, guys, if you use it on higher time frames, okay, on higher time frames. So these are not yet, we are not talking now about specific strategies. Now I'm giving you tricks for using CCI indicator, and after I finish with this, I will present you two different strategies, okay? Now these are guidelines, MJ, for using CCI. So you can apply this to every single chart, every single template, especially if you use CCI, and watch for reactions. You can apply it also to a naked chart and see how CCI is behaving compared to price action, okay? So these are tips and tricks for using CCI indicator, okay? So if the price is rising, we can cover that. That will be a sign of a bearish divergence, okay? Now, let's see another example. We have also plus 200 and minus 100. If the price is dropping, so the price on the chart is dropping, but the CCI moves to positive or plus 100, it will usually indicate a bullish divergence, okay, bullish divergence, and the price will go up. So if you spot CCI divergence, whether it is negative or positive, you can look for other confirmations. For example, you can watch a trend line, and if there is a bullish divergence and a break of trend line, you can usually enter the market. So these are the ideas how you basically, that is how divergence is traded. On MACD, we can trade it by MACD cross. On CCI, we can plot a trend line on the price and see if the trend line is broken. That can be used for both divergence, for both negative and positive divergence, okay? So that is how we can benefit from divergence, okay? And don't forget to put also minus 200 and plus 200 on CCI and watch how price will react when it comes to that level, okay? Now we will cover two strategies using CCI indicator itself, okay? So pretty much this is straightforward. The first strategy will use basically a simple rule set, and that rule set is meant to be basically only CCI trading, but with one quirk. We need to have bearish or bullish candle which will act as a setup candle. So if we use the first strategy on 30 minutes or 1 hour time frame, we should definitely mark important support and resistance levels. That is the first rule. You know how you should mark important support resistance levels. You can do it on higher time frames, for example, and connecting, let's say, wicks, previous swings, okay, and then drop to 1 hour time frame to trade. So if you draw manually important support resistance levels and you enter and you make your entries from M30 or 1 hour chart, then support and resistance levels should be marked on 4 hour or daily. That is how we manually mark support and resistance levels. Now obviously if we want to trade without marking these levels, then we would need to use let's say a pivot point indicator or other pivot point indicator to see how the price would react. Because you will see this strategy is pretty much straightforward. So you need to put CCI of 14, so it's a standard period for CCI, and mark minus 100 and plus 100 levels. Usually that is done by default because if you use a default CCI indicator, you will see these dotted lines. Of course, if you go, now I will show you, let me pause the screen, I will definitely show you this. So let's use this indicator. Okay, so this is how CCI looks like. I have put it all over the chart, okay, just to see, for you to see how CCI looks like. So when you want to insert CCI, maybe some of you do not know, so you go to Insert Indicators, and then you go to Oscillators, and you will see Commodity Channel Index. So it's CCI. Now if you want to change settings on CCI, it's very easy. You just go to Indicators list, you go to Commodity Channel Index, and you have -100, +100, and 0. Now you can also change these lines. You can put a black line, and you will see this. You see this is now thick, black line. You can also add different levels. So when you put this, it will give you by default 0 level. But when you put 200 and then double click, add, and make it -200, okay. So you will then have also these two lines, which are very important for extremes, +200 and -200. Okay. Okay. Now let's switch to our slideshow. Okay. Here. So that is how you use CCI. Okay. And how it's very easy. So if you do not want to look at these dotted lines and you don't have a 0 or plus or -200 levels, you can add it easily. Now let's get back to the strategy. Short entry rules for the first strategy is we have 14 period CCI and it moves below -100. So at least one bar closes to the upside. So if we have a downtrend, we need to have at least one candle to the upside, which will indicate a retracement. And if next candle is bearish, then we just basically go when bearish candle is broken by 1 pip. I will show you that also in the example. Long entry rules, 14 period CCI moves above 100, okay? So we have uptrend, okay? Or basically we just need to have one bar to the downside, which is called a retracement, and we usually enter one tick above bullish candle. Okay, if 2 or 3 candles does not make a tick up or below setup candle, what we do, we discard the trade. Okay, this is how it looks like. So for example, we have this example on euro dollar 1 hour chart. Okay, so you can see at this point, this is for short entry, 14 period moves below -100. Okay, it moves below -100. Okay, at least one bar closes to the upside and enter one tick below, okay, bearish candle. So this is now a mistake for short entry. We should be, this is, oh, I will correct it, because look at this, this is the entry. You will understand what I meant. Okay, this is the entry. It goes above +100, then it makes a bearish retracement, and this bar is candle is broken by 1 pip, and we go for short entry. I will correct this. In the slide. Just pay attention to the slide. Okay. Usually this is counter trend opportunity. +100 or -100. This is overbought. What did I say at the beginning? This is overbought. This is oversold. Okay. So this is overbought. This is oversold. Here, this example, price goes again above 100, then it made a retracement to overbought levels. Look, this is a retracement of one candle, and then this low has been broken and the price goes below. Now obviously you see this is a trend line. Price basically made an entry here. Okay, this is a retracement. Now look, do we have a retracement? Exactly, this was at this point here. Okay, so we didn't have any retracement except for this candle here. So this hammer here gave us a retracement, but there was no break of this hammer. So we didn't make any entry. Okay, we didn't make any entry there. Okay, also this point, that is why you should look for bearish candle and CCI. It's overbought above 100. Okay, this is retracement, but this candle and next two candles didn't break this low here. Okay, so there is no entry. Okay, and Chris, the answer to your question, this is 1 hour time frame, and the 1 hour time frame is not so susceptible for staying in overbought and oversold level. Usually when pair is oversold or overbought, oversold, we look to go counter trend. We don't go in the trend. For momentum surges, that is why we use 0-0. I will also show you a strategy using 0-0 line. So let me correct this, please, so you won't be confused. Okay. Let me just pause the screen for a brief moment, and I will correct this immediately. Okay. So CCI, so this is how it should read. Short entry rules if it moves above plus 100 to the downside, below bearish candle. Foreign period moves below, okay, below minus 100, okay, at least one bar candle closes to the, okay, to the downside. Okay, of course this is upside because we need a retracement, and above bullish candle. So this is how it looks like. Then I will move on to example once more. So pretty much straightforward strategy. So look for breaks. This is counter trend strategy. Okay, do not be confused with trend and counter trend. This is counter trend, pure counter trend. Okay, so we have, you see here, we have a sort of uptrend here. Okay, price is going up, 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 up. This is important resistance. Price has been rejected of the important resistance, and look, there is one candle. Basically, there is one candle which made a retracement to the downside, because you never know whether the price will be rejected. Many traders thought that today price would be rejected from 13.0 or 13.20, and look what happened. If you traded shorts from 30.20 without a confirmation, that wouldn't be good for your account. You never do, guys, counter trend trading without confirmation. You always need to have a confirmation, always. Obviously, for stop loss and target. So this is uptrend. You see the rejection candle from the resistance. Okay, this is rejection candle. Now use your knowledge from candlesticks. If this is bearish candle, this is pretty much very strong bearish candle. It is almost a shooting star. Okay. So yeah, this is stop loss. Of course, you go 5 pips above this candle here, above resistance, and your entry is here at the break of this bearish candle low. For targets, because you're trading counter trend, you should put Fibonacci retracement from this point and this point, and go with Fibonacci levels and using trailing stop. Because when you trade counter trend, you always need to have Fibonacci retracements. So draw your Fibonacci from the low to the high, and if you go counter trend, take your profits at Fibonacci levels, 61.8, 50, and use trailing stop. If you're not sure how to turn a scalp or scalp swing into intraday position, I did a webinar about it, how to turn a scalp. Try to find it on Admiral Markets YouTube, how to turn a scalp into intraday, and you will see it's pretty much easy. But you need to have a Fibonacci tool, because you can see here, this is, I don't have a Fibonacci now because this is not a real chart. This is a snapshot taken from the real chart. So this is probably a Fibonacci level here. And you see the price went upward. So that is why you need to be very careful about counter trend opportunities. Here, this is also an entry. So this is rejection, and usually this is very, very close to this important resistance, some 10 pips from it. We have a big rejection candle, and price, and always it's the best for the next candle to break through highs or lows. Look, next candle has broken through this low, and what happened is, again, this is probably a Fibonacci if you put it from this point to this point. So for targets, I would put Fibonacci here and see and watch touches of Fibonacci levels for taking profits. Now, obviously, if one Fibonacci level is broken to the downside, you move your stop loss to this level. That is how I do turning the swing scalps into intraday or scalps into scalp swings. That is how I do it. I always move trailing stop to the next level. I always move the stop loss to the next level when there is a break of the level. That is usually the best way to secure the profits, okay? So for example, let's use this example. You have entered your short position here at the break of this candle because there is a rejection and CCI above 100. And you put your Fibonacci from this point here to this point here. This probably is Fibonacci level, so it's broken. Once it's broken, I will put my stop loss here, okay? Okay, the question Caroline is asking, is this the multiple targets you were talking yesterday and promised to explain in a future webinar? No, Caroline, this is just about CCI indicator. I do webinars with Admiral Markets 3 times per week. So be prepared for a lot of knowledge and a lot of webinars, okay? One of future webinars we will talk about multiple targets, but now concentrate and focus on CCI, because this is, yeah, thank you. She says, Caroline, it's she, right? She says, I can hardly wait, thanks. Yeah, it's a, sorry, it's a male. So I thought, a Romanian name. Yeah, I thought it was a female name, Caroline, because something similar we use for female names. But great, don't worry, Caroline. I will definitely have a lot more webinars to come. So pay attention. Okay, so this is now about CCI. And if you, let's say, for example, you have put your short here, but you decided to, after some 20 pips, you decided to put your stop loss to break even. If you put your stop loss to break even, that means that you have put your stop loss at entry price plus 1 pip, just for the cover of the spread or for a commission. So break even plus 1 means the price is at the entry, and then if this level is broken, this is your next target, you can put your stop loss here, and if the price hits your final target, you exit the trade. So the primary rule is when you trade counter trend, you need to use Fibonacci retracements and trailing stops, because counter trend is usually a retracement. So this is retracement in trend. This is also retracement in trend. This is also some sort of retracement, and this. That is why you need to be very careful. Now, guys, obviously, let's just for the sake of the presentation here. So this is obviously uptrend. And for example, if CCI went, now what we talked 10 minutes ago, if the CCI went here to minus 200 at this point, okay, for example, just for example, you would go for a long trade. Okay, that is why I'm always saying pay attention to trend. This is counter trend strategy. But if CCI moves down to minus 200, then you should look for longs. Okay. The question Greg is asking, what if the candle that closes in the direction of the trade, the first one, is a very small candle? Too risky. Usually, yes, Greg, I can say that you're right, basically. That is not the primary use of the system. But yes, judging from our knowledge, and let's say from our common sense, if this candle is very, very small, for example, like this, very small candle, it is risky. But think about, for example, risk to reward. Maybe that risk can pay off. You should flip the charts to the left and watch how small candles behave. But that will give you very small stop loss. Yeah, it's a tight stop loss. So you need to basically justify risk to reward. But you know, when I see without CCI, when I see candles like this, usually the candles signify that retracement has already started. Now CCI is a confirmation, because if it's above 100 and you have bearish rejections, that means that the price is already overbought, right? And we should either wait for a retracement or trade the retracement. If we trade the retracement, that is called counter trend trading. Okay? Obviously, if we wait for a retracement, that is called a trend trading, right? So yes, if the candle is bigger, of course, that is definitely a better chance for us to go counter trend if the candle is stronger. Okay? But the primary rule for this is the candle needs to break 1 or 2 pips, of course, not including the spread. The spread should always be included. Okay? Now, good example. Modris is saying, now there is opportunity to show on euro dollar in live. Yeah, but now it's 6:40, and do not forget, Modris, tomorrow is UK elections. So the price, I wouldn't dare to make any trade now. Maybe if you are already in the trade, then you should leave it as it is, because now it's not the time for us to make any trades. Okay? Do not forget, it's 6:40 my time, it's 7:40 on the platform. The London has already closed, so basically there will not be a lot of trading opportunities, and tomorrow it's UK elections. It will be very volatile for GBP dollar especially, okay, and GBP crosses. So yeah, we can use live example, but guys, I need to cover other strategy, okay, because we have also one more strategy to cover. I usually say, yes, I can show you the rules. I usually say, and I usually teach people, trade actively during active sessions. What does it mean? First 3 hours, guys, do not forget primary rule. First 3 hours of each session are most profitable ones, okay? Because usually there is the opportunity when we can go with the trend and where we can make money. Usually it's that time, okay? So go with the trend and make trend opportunities, breakouts. First 3 hours of each session, okay? That means usually that you will trade during first 3 hours of London session, first 3 hours of New York session, and if your time zone and your body allows you, you can trade during first 3 hours of Tokyo session. I do not include, and I never trade during Australian session, Wellington Open, because price does not go anywhere, okay? Yes, now a good question Carolyn is asking. Can't we use this strategy in trend? Yes, you can use it in a trend, but then you need to put it at minus 200 and, plus 200 and minus 200. And if you use it with a trend, you can draw a trend line. This is a good example, and wait to see if CCI would hit minus 200, okay? If it hits minus 200, usually that will be a good time for you to go long, okay? Try to use it, of course. Now there is another strategy which is mostly for momentum trades, okay? And it can be traded on M5 and daily. I can find it to be okay on 4-hour time frame, and I have the example on 4-hour time frame. It's pretty much straightforward. We use CCI of 21, okay? We use 40 EMA and we use 80 EMA, okay? Long position, if 40 EMA is above 80, we look to buy. Of course, that means that blue or 40 EMA is above red 80 EMA. That means that the trend is to the upside, and momentum trade is the break of 0-0 level. Vice versa for short positions, okay? Vice versa for short positions. Now obviously this should have been changed to 21, but just for showcase purposes, this is the example, okay? You see, this example is usually when we do not trade. We do not take any trades, okay? In this example, we do not take any trades. This is when, Greg, sorry, which method? First one, right, or this one? Which method? This one. This method has not been invented by me, but this method is, I think I have heard about this method maybe, I cannot say which year was that, but it was the year of 2010, I think. And I was actively trading also back there, and I was talking to a trader who basically posted this strategy on Forex Factory forum. I'm not sure that it exists anymore, it exists nowadays on Forex Factory, but this is pretty simple strategy, and many traders use it because on Forex Factory there was a thread specifically for euro dollar, and there is still a thread for euro dollar and GBP dollar, and the trader explained this strategy on those forums. And I remember this strategy. It's pretty much straightforward. I don't know, maybe there is some other settings for maybe stochastics, whatever, but this is an old strategy. And back this one, yes, I have invented it. You won't be reading on this on the internet. And of course, there is, you need to put that is why I was talking about plus 200 and minus 200. These are very, very important levels. So if you put plus 200 and minus 200, you basically can trade with a trend. You can trade it with a trend. Without it, you cannot go with trend trades. And this is, as I said, pretty much straightforward. So this means that the trend is to the short side. This is momentum break. You basically open your position here, and look, mind you, this is 4-hour chart, so there is a lot of pips to be gathered at this point. Okay, this is another short opportunity. You see, this is bearish candle, and there is momentum break of 0-0 level, and bang, it goes down. So this is basically a trend following strategy. This is bullish example. Okay, this is bullish example here. You see, there is 0-0 break, and this candle is bullish because the trend is bullish. Okay, so this is one of the examples how you can definitely use CCI with a trend, with a counter trend, with various settings and various charts through different time frames. And what you wanted to see is euro dollar opportunity. Okay, yes, I will go through this. Just let me give you a quick template. Okay, so let's go through this. MA slide. Yes, MJ, I will go through MA slide, but I also had a question about euro dollar, and this is how I would do it personally. This is definitely a previous swing. So guys, always, no matter which system you use, which I don't know, which kind of trading you use, always mark previous swings. So this was clearly previous swing. You see, 1388 was the height, and look where the price went. Okay, so this is previous swing, very important, previous swing. You then drop to 1 hour time frame. You go with insert indicators, oscillators, commodity channel index. We have all the levels set, right? Okay, and look at this, guys. So basically now for a trend trade, okay. Well, you know, Greg, I personally prefer 1 hour time frame for intraday setups. Now look at this, what I was talking about. If euro dollar gets back to this point here, the trend line, and you see minus 200, okay, minus 200 on CCI, that is a good spot to go for a long trade. For counter trend opportunity, guys, okay, yes, even here it's giving some pips, because you see this is a bearish candle, but look, you need to distinguish candle. It is, body is bearish, but if it was more to the upside, it would have been a hammer. So it's not exactly bearish as we would like to do. But let's say if the body was bigger at this point, so then there could be a good confirmation that the price will go down. But still, now it's end of day, so we don't have any big retracements. Okay, let's use another example for this strategy here. Okay, counter trend opportunity, guys, here. Okay, you see the price exactly hit this trend line. Okay, but it was good for some 23 pips. Okay, because see, now Caroline, your question, he says, would we need to see CCI exiting the oversold or just focus on candles? I usually focus on candles and trend lines. I do not, I really don't like to watch indicators for exits, just pure price action and trend lines. So you can experiment, of course, with this strategy. if you see a better usage of it, of course, you can use it. But this is pretty much about CCI, because the main driver for these strategies is definitely CCI. So if this is a trend, see, basically this was a good spot to exit. Okay, a good spot to exit. Okay, another opportunity here. Okay, above plus 100 at this point. This was a bearish candle. Look, big bearish candle, Greg. This is what you was asking. Look, at 1 pip below this bearish candle, look, there was your entry. Initially for some 50 pips. Yes. See, so those are the examples. Yeah, that is big one. So basically, when you see a big bearish candle, what does body means? Okay, body of the candle means that means a current momentum and prevailing bias. So if this was, and this is indeed bearish candle, which is a bit bigger than this bullish, so this bearish candle, this is outside candle, because this candle has completely engulfed previous body of bullish candle. This signifies that bears are now in control, and they are making to further tank the price down, where maybe the buyers will appear. CCI exactly pinpointed, and after a confirmation of a big bearish candle, 1 pip plus the spread below it, there was your entry. Okay, so guys, I hope that you like this CCI presentation. Pretty much straightforward, but use use 0, 0, use minus 100, minus 200, all of these levels, because that is what CCI indicator is in its nature. It's not just plus 100, minus 100. The trick is also to use plus 200, minus 200. It's important, because that is where you will usually see your trades. Look at this example, for example. Look at this here. Look at this. Drop here, a slight drawdown, look, and the price went up. Okay? When it started to curve from minus 200, this is a curve. So that means it started to retrace from minus 200. Look at this. It went to the upside. Okay? It's not 50 pips. It's not so bad, right? Yes, the rules for second strategy and slides. That is what I have seen. Okay? And guys, of course, this strategy use minus and plus 200. Take a snapshot now. Take a snapshot now. Okay? I will leave you to take a snapshot. Okay? Okay, here. And the rules for using CCI on the second strategy. How do you take a snapshot, Douglas? Press, if you don't have any external program, press Alt and print screen on your keyboard. So press Alt and print screen. Print screen on your keyboard. Then go to, I don't know, Word or PowerPoint. You can use also Paint and press Ctrl plus V. So it will be copied. Okay? There is a camera on the screen. Yeah, great. There is a camera on the screen. I don't use Alt print screen anymore, but let's try to use it. Yeah, it's automatically. Windows 8.1 and Dropbox automatically add a screenshot to your Dropbox. So exactly. So yeah, Greg is saying as long as there is no full screen, we have a camera. Great. But you can use other programs for taking snapshots. But well, if you don't have any I don't know, external programs, or you don't have any any knowledge about Windows, then you can just write it down. Yes. So print screen and then Control V, okay? CTRL+V, Control V for, okay. Yeah, snipping tool will work also, exactly. Okay, so print screen and Control V, okay. So this is the rules for second strategy, and you can see, guys, the difference between the first strategy and second strategy. The main difference is this takes both trend and counter-trend opportunities. It uses trend lines, it uses candles, and the second strategy is basically momentum trading by CCI. Momentum trading. I personally, Greg is asking, do I use these two methods at all? I use my Camarilla MACD one and only. Okay, but you know, Camarilla MACD is a complex method, and it uses MACD, and you see every analysis which I do, every setup which I make for weekly recap is done by Camarilla MACD. But I recommend these things. Yeah, Camarilla MACD is not free. It's my proprietary method, and there is actually a course, a complete trader's course for Camarilla MACD, and of course it's not free, but of course all the analysis which I make for Admiral Markets, Forex Street, and weekly recaps, everything is free. And if you have been trading with me with weekly recaps, sign in for Monday weekly recap. You will have a lot of pips, really a lot of pips, if you trade Camarilla MACD setups, which I post every Monday. And yet every analysis which I do every day is a sort of signal for you. Just read between the lines, okay? Just read between the lines. POCs are entry points, okay? Now, guys, for any questions, just send me an email. My email is tarantulafx@gmail.com. So guys, this is my email, and Vin is asking me for harmonic pattern. Yes, just send me an email, I will mail you through, okay? And the last question, Orimas is asking, where could I find this presentation? Which presentation, Orimas? Which one? I don't know which presentation you refer to. He's asking, where could I find this presentation? This session, this session will be uploaded to Admiral Markets YouTube channel tomorrow. So if you missed this session, I kindly ask you to pay attention to Admiral Markets YouTube channel. It will be uploaded tomorrow. I am personally recording, and I will send it to my colleague in Admiral Markets, so he will upload it. And my email, of course, is tarantulafx@gmail.com. Your webinar standard deviation is not uploaded. I need to see through it. Usually it is uploaded, but Douglas, please send me your email. I will give you the link for standard deviation, okay? I think it's uploaded. I asked my colleague, and he told me he uploaded it, so I think it is uploaded. But just for sure, send me an email, okay? I will give you the link. If it's not uploaded, of course, I will give you my Dropbox link so you can see it, but I think it's uploaded. So don't worry, guys. I will cover you every time. So just ask a question, and if there is an answer to the question, of course, I will gladly provide it, if I know the answer, of course. Okay, guys, thank you for listening. Thank you for comments. Use this CCI, guys. This is everything about approach, and not just approach for trading methods and trading systems. I will make additional webinars. I want you to be trained with proper psychological assessment. You need psychological stability to trade successfully. So every strategy is good in its own means. But if your mindset is not in the right frequency, you are doomed. We will talk about binaural beats. We will talk about how to relax before trade. We will talk about what you should do while you trade. And all those useful things. It's not just let's see the cross, let's see the support and trade. There are a lot of other factors which influence our decisions. Most of all, that's our mindset. Okay? So thank you again. I will speak with you again tomorrow with Chris. In the meanwhile, guys, prepare for UK elections, read the analysis, sign up for good webinars, sign up for weekly recaps, and send me an email if you have any problem. Thank you, and I wish you to trade safe. Cheers.